tell me what the top market stories were and the top things that moved. It did tell me that small caps are outperforming everything else right now.
Great.
Do you find that we're looking at a Russell that's going to outperform the NASDAQ here?
I found that we saw one last week. I don't know if that continues, but it's a tough bet because anytime you played the continuation of that bet, it hasn't worked over the course of last year. So for a little bit, it's been okay. For last week, it's been okay, but not much beyond that. It's been
we're coming out of summer now.
Trade. It's been a tough trade all year.
It has been a tough trade all year. So I'm wondering, we're coming out of summer now. The liquidity has to come back. How do you feel about this first week now on the other side of the holiday, so to speak?
Well, liquidity was absolutely horrible. I shouldn't say, no, let me take that back. The volumes were horrible. Liquidity was fine. There was plenty of liquidity last week. The volumes were horrible. There was the whole Nvidia thing, which was like, it felt like it was the whole Nvidia thing, which was like, it felt like it was 80% of the volume wrapped around Nvidia and some of the other AI stocks. It was kind of a very mixed, kind of crappy week for the NASDAQ. And the S&Ps hung in there. They've been wrapped around 6,500 all week, except for Friday. They fell off a little bit. And the same thing for, the Russells hung in there all week until Friday. So I don't know. I think it was kind of like, if you looked at overall volumes for the week, we were just slow. But if you looked at, the trading wise, everybody did good in Nvidia. So I think that was a good thing.
I saw that Nvidia posted a pretty good beat. It came down after hours. By the next day, it was back to break even. Are we looking for a continuation here to the upside? What's the play now that we've come to the other side of this earnings release where you have a 3.4 IVR?
Yeah, it's about 5 handles, 5 handles lower than it was. So, and most of that was on Friday. It was post, dropped like $2 the day of, and then, maybe down, I think it was down $5 or $6 on Friday. But Friday they hit all they kind of hit all the NASDAQ stocks Friday, or it felt like they hit all the NASDAQ stocks. They hit the S&Ps. So the week closed, it was a soft close. But now we get into September. Over time, September is kind of a triple witching month. It tends to be, tends to lean long, but the last like 5 years have been pretty soft. So let's see. If you think the volume's going to come storming back tomorrow now that earnings are all done, I don't think so. I don't think so. I think you're going to need a little scare. They've been sitting on volatility all week. It's in the crapper, and unless you get a pop in volatility, I'm not so sure. I'm not so sure you're going to see a real jump in. You're going to see a real jump in activity. It was just one of those. Here, you just got an opening now. You're up $8. They were up like 15 last night. The S&Ps opened at 5 o'clock last night. They're up like 15. Then they were down a couple, like 2 or 3. Now they're up 8. Bonds are down 11. And they were down maybe to 23. They're trading 29 right now. And the big mover is probably gold, up $30. Silver's up $1. So silver at 41.70 and gold at 35.47. Those are your big winners. Bitcoin down to 108 and change. Down to about 108, the futures. That's a good drop off in Bitcoin, 10% at least. Maybe I think it's got another 10 or 20% to go, but I think I'm alone in that camp. Other than that, I don't know. What do you see?
I got to say, coming back to the market this week and seeing gold and silver doing what they're doing, bit of a surprise. Not that I'm not happy about it. It certainly fits the glove for what I've been hoping for. I had some calls out there in silver that were looking out of the money, 42, 43 call spread that are looking a little bit more in vogue these days, Tom. I think that's, I know, I'm sure you don't like it.
No.
Feels like a reach.
Yeah. I don't have anything on in gold and silver right now. The IB ranks were down in the teens the other day. Gold popped up a little bit, but still not enough. There's not too many commodities out there right now with any kind of juice. Really nothing.
No, and even natural gas last week, coming into this one, we on the heels of what it's a 6% move to the upside. Yeah. That's had some juice in recent. How do you play this from here on out?
Natural gas has been the only one with anything, and it's a tough trade. Because natural gas always is. It's wrapped around $3. It got down to like 275, 280. I've been just short premium in there all year. I think it's finally starting to work. Like, it hasn't been a big trade, that's for sure. I think it's finally starting to work. I mean, I think all of us are leaning long natural gas only because every time it gets the two handle, you just got to kind of lean long, not buy it, but just got to lean long. So I think that's how we've been doing. It's been okay. Um, but most of the other commodities, not. I'm telling you, man, my positions are small. The only thing I've got that's any kind of size at all is bonds, and the Ivy rank in bonds is down to like 8. So it's bonds are a pure delta play for me. Just long some deltas in there, and at 113.28, they're not rich, that's for sure.
But it's just more of the same for bonds, right? We've been trading at 113, 114.
Yeah.
How many months now?
Forever. Literally forever. I mean, we've been going back and forth since, well, you can see here, we haven't done anything pretty much all year. And, we've had every time we rally, we sell off. And every time we sell off, we rally back. And it's just been arranged the entire year in bonds. It almost gets to the point where it's a little scary because you're kind of thinking that, with all the pressure on everybody to lower interest rates, the bond market's not doesn't trade like they're lowering interest rates. That's all I can say. The bond market just doesn't trade. The shorter term bond, I mean, the 10-year is up to 112, which is, higher. And so short term rates are a little bit lower, but long term rates haven't moved. I don't know if there's much there. I actually don't even think there's a trade there other than, a delta trade. That's it.
Yeah, IVR is both in Z and ZB going into this week below 10.
Yeah.
It's not exactly the most appealing situation, but there hasn't, you could see here as you go down to the shorter end of the curve, even out to ZF first, which are the 5-year notes, there's a little bit of this tick to the top side where the short end of the curve has been a little bit more stable than the long end.
Yeah.
But even so, Tom, what does it mean to you that gold and silver are blowing out the way that they are while bonds are not enjoying that same benefit? Is that meaningful whatsoever?
Well, when you say not enjoying the same benefit, when gold and silver are usually, I'm not looking at gold and silver as a flight to quality. I'm just looking at gold and silver as it's a pretty thin market. And, I don't think anything beyond that. There's not a lot in gold and silver either. If you want to talk about a lot of liquidity, it ain't there. So, the bulls have gotten paid. That's about it. I don't think there's a lot of trade there.
Let's go back to the stock market here and talk about everyone's favorite Mag 7 names. You mentioned Nvidia earlier. Yeah. Apple had a nice run up throughout the month of August, recovered here, obviously, as we close out the month. 232 and change now. It's a 15 IVR. It's a little bit richer than the indexes, but not by much. Is that appealing to you, sir?
It's not appealing to me to the upside. It's kind of, it was appealing to me. I thought Apple was cheap at 200, 202. I think it's had its explosive move. Now it's 232 with a binary event coming, I guess this week or next week. It's got its little dog and pony show, and I think that's one of the reasons it's been staying in play. But where it is currently, there's not a lot of juice in there, and the upside has no skew. So I'd be careful in Apple here. It feels as Apple went from being as cheap as any tech stock to being as expensive as any tech stock right here in a very short period of time.
I would point out that they have this event coming up on September 9th.
Yeah.
Apparently they're going to do a runway for the next 3 years of iPhone releases. So they're really trying to get some goodwill going on.
They are trying to get some goodwill
good
going
luck.
On. But,
hasn't really worked out so far.
It's really hard when you're a massive company like Apple to keep the when you're a massive product-based company like Apple and you're trying to keep the retail, public buying your products at all costs. I can't believe they've been able to hold on this long. It's kind of incredible, with a product that hasn't changed that much over the last, decade and a half. It's kind of surprising. I mean, they've done a remarkable job. Whether they can hang in there, I don't know. I don't want to bet on them.
Not betting on Apple. Okay, well, let's move over to something different then. It's not a Mag 7 name, and we're going to stray away from it, but Netflix has been one of the few companies that did not have a pretty good month of, we'll call it good month of August here, Tom.
Yeah.
It had run up earlier in July after the earnings, but then sagged the rest of the month.
Yeah.
$1,208, sideways chop, only an 8.8 IVR. This is going to be the story for a lot of these names going into September. Lots of low volatility across the board.
Yeah, I mean, you've got a lot of stocks that are kind of like, just off their highs. The challenge with Netflix is you're probably sitting there going, I'd love to get kind of a little bit short this stock, but when are they going to split 10 for 1? And then I'm going to choke on a $10 or $20 gap. So the problem in Netflix, to be fair right here, the problem in Netflix is it's almost untradeable for retail investors. Netflix at $300 or $200 was tradable. It was kind of fun. Netflix at $1,200, you're talking about multi-dollar wide markets, dollar wide markets at a minimum, multi-dollar wide markets most of the day. You're talking about like just not a lot of liquidity. It's hard to roll calls and puts up and down. I would say Netflix is a no-show for 98% of retail investors. Unless you got a strong axe to grind in Netflix, I'm thinking it's just not an interesting play for individual investors. Not because I'm bearish or bullish. There's just a hard trade. Like if you want to trade Apple, go ahead. If you want to trade Nvidia, it trades like water. It's pretty liquid. But when you get down to certain stocks, Netflix being one of them, other stocks that trade a lot that aren't that liquid, I would say Meta's okay, Microsoft's okay, Reddit's not okay, Netflix is not okay, and then everything else is kind of all the other big tech stocks are generally pretty good. Tesla's great, Nvidia's great. You can go pretty much down the line, everything else. And I'm looking at my watch list just to get an idea of kind of what's tough stock to trade. Costco's a tough stock to trade, but only because the width of the markets. So I think you just got to be careful here. We're kind of in no man's land. It's 64.80 where the S&Ps are right now. It truly is no man's land. So unless you've got a really strong opinion one way or the other, like I'm leaning a little bit short here, but I wouldn't consider that a very strong opinion.
That's really where I wanted to go next in terms of how do you approach a market now? Like, let's say someone's tuning in for the first time. They've been checked out for the past week, the past month, maybe all summer long, right?
Yeah.
They're looking at this market with fresh eyes. They got a pile of dough sitting with them. Is this the low volatility environment that they continue to sit on? How do you wade back into the waters here when vol is already so low?
Well, that's the $1 million question. And that's really the fairest question here is that how do you find opportunity when vol is not screaming opportunity? And how do you find opportunity when a lot of these stocks, they're not cheap enough to say, hey, I should buy them here because they're still, right off record highs. They're not necessarily expensive enough to sell them because they've just come down, a couple of percent, but that's it. And not even the broad indexes aren't even down 1%. So it's a tough spot. And so you're looking for isolated plays. Like I would say right now, most tasty traders are sitting flush with cash. I think that's kind of like par for the course when you've got volatility at the low end, super low end of the range. You can bring up a vol chart right here, people can see. When you've got the VIX, like it hasn't had an uptick, and there's story after story, like this is the volatility right here. I mean, we really haven't had an uptick since April. And so when you're looking at this VIX chart, you're thinking, okay, you can read just story after story about how short the street is on volatility. And so far they've been right. But I wonder if they're short volatility, short the market, and they're taking a little bit of they're trying to get a little payback in vol to offset some short positions. I kind of think that's what it is. And but there hasn't been an uptick. And so there hasn't been a hell of a lot to jump all over opportunity. You look at this VIX chart and the spikes in volatility are synonymous with opportunity. That's how you have to look at the market. Spikes in volatility mean there's a lot of opportunity. When volatility just keeps going down, there's less risk in the market and you don't take these big swings, but there's, opportunity is pretty isolated. So you've got to find it in weird places. Like Apple earlier this month, or, maybe some overbought stocks like, in hindsight, Nvidia or Coinbase or something like that. But you got to work hard.
Sure.
Not easy here.
Before we bring on Ilya here, you did mention Coinbase and perhaps a conversation about cryptos warranted. Rough week for both Bitcoin and Ethereum, closing at some of the lowest levels that we've seen, really going back to the start of July.
Yeah.
You thought that you said earlier, which was not a passing comment, perhaps that Bitcoin could be 10 to 20% lower. What makes you feel that way?
Well, first of all, given where it's been trading for so long, digital assets, cryptocurrencies haven't had a single pullback of any significance for a long time. I mean, in April, they had, their 15 or 20% pullback when the market had significantly more. And I think that when you really think about over the last 10 years, we really haven't had much of a pullback at any point. There has been no crypto scares to the downside. I mean, they've been isolated. Let's say that, a couple over the years, but not much. And I think there's been, excuse me. I think there's been a crazy amount of there's been a lot of buying in all these crazy funds, buying ETH, buying Bitcoin, and there's been this relentless fund demand for crypto, which I don't really get. And I think it's a lot of hype and it's a lot of overhype. And I think it kind of blew its brains out at 120. Let's see if it can hold here. I'm curious who the buyers are at 108. Like I would be a buyer of crypto, but I'm a buyer around 75 or 80, of Bitcoin. And I'd be a buyer of ETH, but I'm a buyer closer to 3,000, a little, maybe 3,200 in ETH, not 4,500. So I'm interested to see who's going to step up and take a stand at 108, 105 in Bitcoin, 100. I'm just curious. I think the public's already long. I think most people that trade this stuff are in, and I think the markets they've been over the years, they've traded thin, they've had their fund support. I'm not so sure, when one of the rats turns, and some rat is going to turn, I'm not sure where this thing is going to go, but I think it's rich. I'll put it that way. And there's way too much bullishness. I mean, you're talking about just across the board. Nobody thinks crypto can pull back. Nobody.
Yeah, the Ethereum folks that I follow are riding high, like, they're going to live forever. And
the valuations, the bullshit out there, like we're, we do a lot of work. I sit on the board of a crypto firm. We do a lot of investing in crypto. I listen to this stuff all the time. The valuations are insane. They're literally insane. I mean, there's companies that trading for multi-billion-dollar valuations that aren't even close to turning profits. I mean, it's just like the numbers are.
Is it 2021 Is it 2021 all over again?
You mean in crypto?
Yeah, I mean, there was some ridiculous. You just had to slap something BTC into your slide deck, and you get venture capital funding.
Yeah, I mean, the problem is there's not that many crypto stocks you can trade. I mean, when you want to talk about crypto, I mean, other than some of the ETFs, which are pure crypto, you can trade Coinbase, and then what else? MicroStrategies, Robinhood. I mean, what do you have? 3 stocks that you literally can trade that are considered to be crypto stocks. I mean, I don't know when Hood stock, but it is. MicroStrategies is kind of a pure play, and Coinbase is probably the most liquid, most highly correlated. But I mean, Coinbase dropped 25%, and crypto moved 10%. I don't think it's easy, is my point. Not like nothing's ever easy, but I think crypto's still very rich.
Well, the Bitcoin chart looks pretty ugly. I know that's going to delight Ilya's ears. Ilya, why don't you come join us and tell us why the market's going to fall this week?
The problem with crypto is that when you say the Bitcoin chart looks ugly, it does, but you can't short cash crypto, and there's no leverage in the cash market. So at least not in the US. So it's when the Bitcoin market looks ugly, it's pure sellers. Like it's longs who are puking. It's not the same thing when you see a stock that when they just ride a stock into oblivion. That's like pure sellers. But when that's like longs and shorts together pushing a stock lower. When you see crypto go lower, I mean, it's really just passive longs that are getting out, taking profits.
That it is.
We'll see if people have diamond hands or paper hands the next few weeks.
It's a tough instrument to short.
Now's the time.
Now that you've got options on IBIT, you can have yourself a reasonably priced put vertical if you wanted one. IV rank is not that high in there. There's decent risk reward. You're not going to be in there for the whole move, but if you wanted to take a punt here down to, let's say, 54, I mean, obviously the market's not open now, so very indicative on what's there as far as price hissing it up, but it could be had.
Yeah, I mean, you're right. There are in
my boy.
trade ETHA, which I do trade. It's got decent, volatility. It's kind of, it's on the high end of its range. I have a bunch of positions on in ETHA. BITO have a bunch of positions on. So, I mean, this stuff's tradable. It's retail. I guess you'd consider it retail friendly. I don't think that these ETFs move the underlying that much. I think the underlying moves, I think it's a cash.
Oh, absolutely.
Yeah,
absolutely. It's just it's more like if you wanted a small speculative bet on Bitcoin being a little bit vulnerable here, it could be had, and you could structure a kind of ticker agnostic risk reward is fine sort of a position where you'd be risking one to make two. Of course, you'd have delta exposure, but if that's what you want, you could have it.
I agree with you. And it's good that we've embraced all the different product dimensions now.
Yes.
Which is one of the, I think the most important thing about, remember the Bitcoin asset class is really only a couple $1 trillion. Not Bitcoin, but
tiny.
The cryptocurrency asset class is only a couple $1 billion. And when you start to think about, us embracing multiple asset classes, that exceed $1 trillion or $2 trillion, for the long run for traders, that's a really good thing. And
totally.
And that's, that bodes well for the future of what we're doing. Because you got to have, there's not that many other spaces out there that currently are even close to $1 trillion asset class that we can't trade. I don't even know if there's any other than like real estate, which you really can't. But, my hope is that in the next however many years it takes, and different things can be tokenized so that there can be partial ownership in different things. Mm-hmm. And then tokens can appear on platforms like Tasty. You will have an opportunity to broaden what we can trade so that there'll always be something in play. Always.
Yeah.
For the directional player.
Yeah.
Tom, I just asked ChatGPT, what are some $1 trillion asset classes that aren't tradable? To your credit, number one, real estate pops up.
Okay.
Number two, human capital. Don't want AI talking about trading humans here. So
take it easy there, Skynet.
Yeah, human capital is a tough one. I mean, human capital is tough one. When people find out the total size of like the gambling market globally and all that kind of stuff, you're going to realize how small it is. You're like, holy cow. I can't believe that, how tiny some of these markets that we think are big, how small they really are. But human capital, I don't know, Chris. You got to tell me how to trade that. I don't know.
Humans, ChatGPT, choice wording here, can't securitize or sell their future labor streams, though in niche cases, athletes and artists have attempted it via income sharing agreements. I actually had a friend who had a startup that did something like this, which I have to talk to him about a little bit more now. But it was basically that if you were going to college, right, you could get your college paid for by someone who would basically get a cut of your earnings after you graduate. So if this person's like an engineer at a MIT, chances are that they're going to have a high paying job. So it's worth the investment in their education from a private investor perspective. You'll be able to recoup it over the next few years. Win-win.
Except who's going to clear those trades? Those are peer-to-peer trades, and you're going to pick some random kid that's going to, that's going to MIT in engineering, and I don't know who's going to clear that trade.
Any baseball cards for MIT students?
No. I mean, that's long been
the startup doesn't exist anymore, into my memory. So
yeah, but that's long been. So I'll tell you a quick little story. Back before we built Thinkorswim, and this is 1999. We came up with an idea to basically trade human capital. I know it's going to sound weird. It's going to sound a little bit. It's just going to sound a little dark. But we came up with a way to trade anything you want. We called it options on anything, and you could trade. For example, your kidney, your eyeball, whatever you want, and you could trade your heart. And the problem is that we had to figure out a way to clear it. So we developed this clearing system that essentially allowed you, if somebody tried to exercise the option, it allowed you a way to buy out. So that it was centrally cleared. And so there is actually a way to trade human capital. They have tried that before, just so you know. They've tried that before in sports, and it's failed miserably, sports contracts. And there was a famous, Warren Buffett speech that he once gave, I think it was at Columbia University, where he basically said, I'll give everybody in the room $100,000 and I'll take 10% of your future or something like that. I don't remember the exact terms. And, he's like, I would do that all day long. And he was probably right, of course. But, it would have been impossible to execute or to clear. But I do.
Yeah. Well, the other ones on this list. You said go ahead.
No, go ahead. What else on the list?
Well, that infrastructure assets and private business equity, which is obviously a big avenue for unlocking potential value. I'm sure they would like the exit liquidity.
You've seen able to put startups dip a toe into this kind of thing already.
Yeah, there's actually been some swap markets that are like, you can clear with that. There's some tradable swap markets out there, like with big banks and stuff, they'll make a market for you. But I guarantee that, unless it's a hedge play, you can't do it. Anyway, the fun part about it, it's fun to talk about all this stuff. And I do think that with tokenization, you can get somewhere, but I don't think we're anywhere close. So we got to stick with the list of markets.
One quick thing here. I was looking up some information about the stablecoin market a few weeks ago. Mm-hmm. We're on pace right now where by 2027, if the stablecoin market balloons to the $1 to $2 trillion, it's going to be so materially impactful on absorbing the short end of the yield curve that Treasury may have to alter its issuance schedule based on the stablecoin demand that's building up. So this is becoming a more integrated part of our entire system.
Do you mean because they need to collateralize everything with, because it has to be collateralized? Is that why?
T-bills.
Yeah.
Yes.
Yeah, that could be interesting. I mean, we're following the stablecoin market really closely. I mean, there's nothing, you do understand there's nothing there. It's just, there's no trade.
No. It's an important part of the financial infrastructure that's coming together, though.
Yeah. I'm fascinated by it myself. And so, we've been studying it, but I'm not sure there's anything there.
Well, Tom, there's no earnings this week that catch my attention. So I wonder if there's anything on the calendar, Ilya, that can get some volume back into these markets.
Oh, sure. No. The calendar this week is much more exciting than it was last week. We'll see if anybody cares. One fun little factoid: if you look at a chart of the S&P 500, you'll notice on a daily chart, it's a little bit fuzzy on the 4-hour, but on the daily, you can see that basically the market has done nothing since August 12th, when it got that CPI report, and everybody got convinced that the September rate cut's coming. So you get a 1 day up, then sideways, then drift, then Powell gives everybody a fillip, wonderful, then nothing, then Nvidia gives them a fillip and it's erased. So the market hasn't really done anything in weeks. And it's almost as if it's jumping from event risk to event risk, like Wile E. Coyote that's run off the edge, but is trying to run so fast that he doesn't realize the ground is gone. Like, okay, let's just survive this one piece of event risk. Oh, it's not as bad as it could have been. Okay, next piece of event risk. Next piece of event risk. And as long as it's not awful, okay, we've survived another day. But there's no
Okay, so what's the event risk this week?
No momentum to any of this. So
what are we looking to this week?
We'll see if we survive. There's the ISM reports. They'll be important. But of course, the big deal at the end of the week is the jobs data. Because if everybody is collectively speculating on can they survive the next Fed headline, that's the next big Fed headline. Now, the ISM numbers are going to be, I think, market moving in the sense that we increasingly are getting evidence of exactly what the Fed was concerned about, which is that inflation is getting pressured higher at a time that growth is slowing. And the slowing and the inflation will both be on display in spades in those ISM reports. And obviously, in the last few have told us that this divergence is widening. So we'll see if that continues and if the market gets spooked. But really, it's the jobs data. And if the jobs data is ugly at a time when we've seen inflation start to really pass through from wholesalers to retailers on the tariff side, we're between the rock and the hard place that the Fed didn't want to be at. And so that sets us up for September's FOMC in spades. We'll see. NASDAQ hasn't had 2 down weeks since the last 2 weeks of March, and we just had that as of last week.
I mean, if you look at bond premium now, Ilya, it's non-existent.
Right.
There's no
it's super cheap.
There's no bid in the puts and bonds. They're trading like they're trading like there's a floor. And which is super weird. I haven't seen this in a long time. Bonds trading like like the puts that are 1 point out of the money are trading for nothing. And I haven't seen bond premium this cheap in a long time. And even though the upside there's nothing there, which is really strange with all these numbers. So the other argument to make about this week is until you see something, with all the sellers in volatility and all the sellers in bond premium and everything else and in stock premium, I'm going to say you got to show me a move first, because there's a lot of people choking on long vol out there, and there's a lot of people, expecting big things. And I don't know, we might be waiting until October. I mean,
it could be. It totally could be. It totally could be. So I've been sitting on the long end for bonds forever. And it hasn't gone anywhere. It's not losing significantly. It's not gaining significantly. It's just kind of there. But it's so cheap that anytime that it looks like it might have another one of these slow meanderings in the 116 direction, that makes sense. Fine. But I've been sitting on it forever now. Just this current position, I've been in it for 50 days, and I've still got 18 until expiration before I have to roll. So eventually, something. I think stocks look better risk-reward wise on the short side because vol is so ridiculously cheap, and you're near the highs. You haven't gone anywhere in weeks, so it's asymmetric. If you're going to take a bet, it's a better bet, just risk-reward wise, to be short than long. I like the dollar because, again, for all this talk of a dovish Fed and everything else, the dollar has been bottoming since the beginning of July and hasn't stopped bottoming. So it feels like if it's able to shrug off all this wishful thinking about Fed rate cuts and Powell even endorsing those, this is a market that wants to go higher, but for some excuse. So I like long dollars. I'm probably going to have to flip over my gold position. I'm still short calls in there. I'm still on the right side of it because the premium I've collected exceeds the sort of baby loss inside this range. I don't love the long side, But if it breaks through some of these recent highs that it hasn't been able to clear out, I'm going to have to. So far, it's still stuck-ish.
Gold and silver up 0.9%, 2.42% respectively here. Tom, let's close this out. We're getting past 5:30 Central. What's your top opportunity this week? Final word.
S&P is up 450 tonight, so it's kind of like an absolute nothing opening. Bonds are trading where they traded all night. Last night down 11, and Nasdaq's up 20, so it is nothing really, especially after down 50 on Friday. I'm going to agree with Ilya that if you're looking for the pot odds or the asymmetric opportunity, it's probably to the downside. I just feel like the upside is kind of fully priced, but I just don't see enough vol here to get me excited about there's not enough people that are willing to jump in and puke out longs and all that kind of stuff. So I'm going to say that I'm going to lean short this week. I don't think they're going very far, but maybe you can get down under, maybe 50, 75 handles lower. The expected move for the week is pretty small. I think it's like 75 handles. So maybe you can get towards 6,400. I don't know. We haven't had a big move in either direction in so long that, fingers crossed that we get something.
Yeah, 4 DTE is just under 70 right now, 69 and a half.
Right. That's right. It's only 4 days. Yeah, 69 and a half points. So it's not much either way. You're talking about back either we're going to touch record highs again or go down towards 6,400. I think based on everything else I see, the buyers are going to get tired. And I don't know if you're going to attract sellers, but the buyers are going to get tired. So I like the downside a little bit, and I'll leave it there. I like the upside in bonds. So I'm very similar to Ilya. I like the upside in bonds, I like the downside in stocks.
Stay long silver. It's working. I'm not going to look to give torch to the mouth.
That's your game. You can stay long silver all you want.
That's fine. It's a nice thing to come back to. Tom, we'll be back overnight, of course, because Tasty Live programming continues 2:30 Eastern, 1:30 Central, trading with IG over in London. And then you and Tony are back in the morning, 8 Eastern, 7 Central time to kick off the trading session.
Yes, and looking forward to it. We have a short week. We'll be here Tuesday and Wednesday. And actually, we'll be here Tuesday, Wednesday, and Thursday. Thursday afternoon, we go out to San Francisco to visit Ilya. And then Friday, we have a show in San Francisco. And then we're back in Chicago on Friday night. So hopefully.
And I get you guys next week here in New York.
I'll be there. Come see us at the Regency Ballroom.
Yes. What kind of place is that? Have you been there before?
It's awesome. I've seen lots of concerts there. It's great.
Really? Okay, cool. Looking forward to it.
And you know what? We have a new rising star coming up next year in Tasty Live. So stick around.
Yeah. Let me tell you about this kid.
Yeah.
I think I did the interview a couple of weeks ago because we filmed these. I think he's 16. His dad gave him, it's not a rising star, it's a future star. He's a future star. So he's 16. I think he's a really smart kid. I want to say he started trading when he was in 8th or 9th grade. His dad gave him a couple $1,000. He lost it all. He took a big shot. He got cocky, took a big shot, lost it all. But he loved trading. He spent all this time learning. His dad wouldn't give him any more money, said he had to go out and get a job. So he got a job in a pizzeria, bussing tables at this Italian pizzeria down in Florida where he lives, and made a couple $1,000 back, and then doubled and tripled his account after that because he went back to mechanics. And so he's a really interesting kid, and I liked the interview a lot. It was fun.
That's cool.
Tune in next. That's all for First Call. See you tomorrow.
A future star. Peace, guys.
Hello, everybody. We're back again. This is going to be a fun episode today. We're going to do a future star. Anthony in the house. How are you?
I'm good. How are you?
I'm good.
That's good.
I'm excited you came up here. You're a Florida boy.
Yep, all the way from Panama City. So we're very excited to be here in Chicago with y'all.
I'm glad you came in. And we haven't done a future star segment in quite some time. And I love these because there are some kids that I had their first interview when they were 12, 9,
Yeah, pretty young.
15, 16 over the years. And they're all still trading.
Right.
They're all still trading. So the good news is you're doing this at an age when you're probably like one in a tiny handful of kids in your school.
Yeah.
How many kids go to your school?
Probably around like 200 now, maybe 300, because school's still growing because it's so new.
Oh.
But yeah, so very, very small amount, and even smaller that have even looked into investing. So
I'm sure. And you're going into 11th grade.
yes, I am.
Got it.
Junior.
If I was to say, hey, what's your favorite, like what do you excel at?
I'd say I really excel at math.
Math.
I like math. Yeah.
And you know that like this is like at Tasty and really for trading, it's just a big math game.
Yeah, exactly.
Everything we do is pure quantitative probabilities.
Right.
That's
pure numbers. That's why I think I was able to fit in so well with this, because it was numbers, and I'm used to that.
It's just a crazy numbers game, and it doesn't. In the world of like stocks and futures and any other kind of like asset, let's say, it's very black and white. Like if it goes up, you make money,
Right.
and if it goes down, you lose money.
Yeah.
That's it. In the world of trading, it's completely different. It's all strategic, so it is all numbers.
Yeah.
And all the numbers are kind of you can back into probabilities.
Yeah, exactly. And I really like how you can still make money if you're wrong, but you can also lose money if you're right. So you can make money and
That's my line.
Yeah.
Use that line like other times.
yes, I've heard that a lot.
Yeah.
Right, but yeah, you can make money in bullish markets, standing markets, and even bearish markets. So it's very nice.
How long you been following the stock market?
Probably around a year and a half now, maybe 2 years.
Yeah.
So
Are there certain companies you like, or do you care what you trade at this point, or is it just?
well, normally I like to stick to tech and companies that I hear about, like Chipotle, Intel, things like that. So bigger companies, more liquid too, and so yeah.
Just companies that you recognize.
Yeah, exactly.
Yeah.
Right.
Do you trade any indexes or anything like that?
Sometimes the S&P 500, but no, not too many indexes.
Okay, so you're going into 11th grade. You started trading maybe like halfway through your 9th grade, and then all the way through 10th grade.
Right. Yeah.
Okay, a friend of your parents got you involved.
Right.
Okay, and he's a trader,
Yes, he is a big time trader.
and he talked you into it.
Yeah, he basically talked me into
What kind of psychopath talks a 16-year-old, a 15-year-old kid into trading?
a very persuasive psychopath.
very
I'll tell you that.
persuasive,
A very persuasive one.
All right, that's good. So very persuasive psychopath talks you into starting to trade when you're 15 years old, which I actually love. And do you remember do you remember going to your dad and saying, like, because you didn't have any money, right?
Right. Yeah, I had no money at the time. I couldn't even get a job.
Okay. Well, yeah. I mean, you're 14, 15.
Right.
And you went to your dad. You asked for what?
So I basically, I asked him for some money to get to trading with, and he had told me that if I was able to show that I was actually, willing to commit to this and to do the research, that he would give me some money to start off with.
Because I'm not sure if my 14-year-old son or 15-year-old son, who hasn't at that point even learned to hit the toilet, when I would be confident in giving him money. So I got to give your dad some kudos, because I'm not sure that I would have done that with my own son.
He was not confident either. In fact, he told me, he was like, "Son, I know that you're going to lose this money," because with any kind of market, only like 5%, I think it is, of traders are actually profitable throughout the year. So
it depends. The statistics vary with, it could be as much as 40%, 45%. It could be as much as 5%. Depends on product, style, everything like that.
that's true.
How much money did you ask for?
Well, I asked for around 3,000, because I saw that was really like the baseline, right? Basically the minimum to get into trading. And so he said, "Son, I know you're going to lose this money, but I want you to go into this being able to learn from the kinds of strategies you do, and to be able to really pick up from this." Because he said the goal for me was to not try and make money, but it was to try and learn really just it was that I was doing, right, in trading. So
You got a good dad. And
Yeah.
he believes in you,
Yes.
because I'm not sure I would have done that with either of my kids, and they're both pretty successful now. But I don't know if I would have done that. So he gives you 3,000. Now you're like you're obviously trading in his account, but he gives you a couple thousand trade. He doesn't trade.
Right. He does not trade.
Does your mom trade?
My mom doesn't trade either.
Okay.
No.
So you're on your own.
Right.
You got this.
Basically.
You got this one friend of your dad.
Right. One mentor that's giving me, decent advice, but nobody in my family trades.
Right. Okay. And giving you some decent advice, and you can obviously reach out to him by email or call him if you have any questions.
Yeah.
So but you're still pretty much on your own.
Yeah.
What's your first trade?
My first trade, I think, was an iron condor on Meta for their earnings because I dropped in around earnings.
Oh, so you went straight into the heavy stuff.
Straight into it.
You do a Meta earnings trade.
Yeah.
And did Meta blow up either way? Was it a crazy?
It did actually blow up. Yeah. So my first trade was
a full loser.
Yeah, pretty much full on loser.
Full on loser. Then you're like, oh, this isn't as easy as I thought it was going to be.
Yeah, it was very rough on me.
Okay. Before I get into a lot of the fun stuff, how long did the $3,000 last you?
It lasted probably around, I want to say 6 months, maybe.
That's not bad.
Yeah, it lasted
6 months, and then you blew up the account.
Yeah, and then I just blew it up.
As you were in the process of blowing it up, you kind of realized that you were blowing it up.
Yeah, pretty much.
At some point, you probably doubled up to catch up.
Yes, I was.
The classic mistakes.
Yep, exactly. I was panicking. I was like, I need to get out of this. I can't be a fit. I was worried about letting my dad down, even though he had told me he knew I was going to lose all the money.
Now, was he tracking you this whole time?
He would ask me how I was doing. Every week or so.
He didn't actually look at the account.
No, not really.
No, so he's just asking how you're doing.
Yeah, exactly.
And are you trading all the time?
Yeah, around like once, twice a day, couple more. Yeah, more or less.
So you're making a lot of trades. You're learning.
Yeah.
But you're not doing very well, and you're
no.
And you realize that you're in trouble.
Yeah, exactly.
At what point, after you kind of blew up, did you let your dad know that you blew up?
It took a lot longer than the day it happened. I'll tell you that. It was probably maybe a week after because I was so worried about it.
But you came clean.
Yeah, I did come clean. He did find out eventually, and it wasn't by looking at the account. I told him. So,
when my son was growing up, and he scratched my car, a nice car.
A nice car.
Yeah, and he scratched it whole side. And came home, I saw my car, and I'm like, and then I didn't see the scratch for a couple of days. Mm-hmm. And I said, "How'd this happen?" He goes, "I don't know, somebody did it. I was parked." And I'm like, and he totally
negated from himself.
Totally. When he gave the commencement speech to his graduation, and he copped to it in front of everybody. He goes,
wow.
"Dad, I scratched your car."
At the graduation.
So anyway, it took him 2 years.
Oh wow.
So a week's not bad.
Yeah. Well.
Okay, so you tell him, okay, and what does your dad say to you?
He said he wasn't surprised. He knew it was gonna happen. Okay. So, but
he probably said cheap lesson.
Yeah. It was. He said it was a good lesson that I learned, but that he wouldn't help with funding me anymore because he had looked at the kind of poor decisions I was making towards the end, with trying to catch up. And because, somewhere during that period, he said, if I was able to actually, prove that I could...
prove concept.
Yeah, prove concept, that he would try funding me a little bit more. Yeah. And this was basically proof to him that I wasn't capable of holding on to it. And so I felt super defeated. I was like, darn,
Are you competitive?
Yeah, I'm a very competitive person, actually. So this was a really sad moment.
You do what kind of sports?
I do jiu-jitsu. So
I don't know a lot about jiu-jitsu, but do you have?
It's like a physical chess, sort of, in a way. And
so do you fight other people?
Yes. So you spar people, and there's all these different kinds of positions, and I kind of like to think of it as the physical chess because there are situations in which the opponent is up against you, even though you might have not totally lost. They're up, you have an advantage up on them, and so it's it's a very competitive sport, and it's not really team-based.
So you're super competitive.
Yeah.
So now you're mad.
Yeah, I'm very mad. And so,
how about your friends? Do they think you're crazy?
My friends think I'm crazy. Yes, they were like, this. We knew this was gonna happen. This couldn't. They were basically telling me that this was proof that it was basically just gambling. You know?
Did your dad's buddy offer to back you, to fund you?
Not necessarily, and I didn't want to go to him
Okay,
for backing because.
But you still like trading.
Yes,
You're
yes,
just
very much
mad
like-
that you weren't
yeah,
successful.
Right. This is a defeat.
So your dad says to you, if you want to trade, get a job.
Yeah. Well, I came to that on my own.
Okay.
But yeah, he had said that the account is still, you can still manage the or not. You can still manage the account, and so I thought to myself, I'm gonna go in January. I'm gonna get a job, right? Because that's when restaurants pick up. And so I went to my my local pizzeria.
You're 15.
Yeah, I'm 15 at this time. So I wasn't.
You work at 15? I guess so, yeah.
You can, but it's a lot more difficult than 16, right? Because you don't have
Okay.
a car that you can really drive to work.
Oh, how far do you live from the pizzeria?
At the time, it's like a golf cart ride because it's right outside the community I'm at. So it was perfect that they picked me up. So, but yeah, so I drove my golf cart there probably around April of this
By
year.
the way, only in Florida can you drive a golf cart to work, okay? In Chicago, that doesn't...
It would not work around here, not in this city.
You can't drive a golf cart. Nobody does that here.
Yeah.
Yeah.
So I guess it was good that we lived in Florida, or we live in Florida.
So you drive a golf cart to the pizzeria.
Pizzeria,
How much they paying you?
they pay me around 11, 12 an hour.
So
So
11 or $12 an hour. That's a lot of hours you got to work.
a whole lot of hours I was working.
You get tips.
Yeah, and I'll tell you, since there's a cap on how much you can work during the school year, it was not fun. It was really tedious.
How much money did you make?
Over the next couple months, I made around 3,000, 3,500 probably.
3,000. You saved it all.
I tried to save as much as I could. So
That's impressive.
yeah, I mean,
Okay.
I was surprised with myself.
And you put it back into your account.
Yes, I came to my dad with the bills in my hand, right? I withdrew from the bank. I told him, Dad, I want to put this back into my account.
And what did he say?
He said, go on right ahead, son. And so he took the money and he transferred it into my account. So I was back to where I was before.
That's pretty cool.
Yeah.
Yeah, that's cool. So now you're back to your $3,000 account.
Yeah.
And now you're trading like smarter.
Yeah, I came in with it. I was in the same spot, but I had a lot more knowledge than I did before. So, I was able to trade a lot more logically than before. And eventually I was able to, before I had deposited the next 1,000 in, I was able to make around 1,000 on the 3,000 I had deposited.
Oh, that's nice.
Yeah, very nice.
So you'd figured something out.
Yeah, I
You became more mechanical.
yes, a lot more mechanical.
Now,
than I was.
what kind of strategies? I mean, it's small accounts. You're not doing anything naked, right?
Yeah, yeah.
So you're mostly trading what? Verticals, spreads?
Yeah, yeah. Iron condors, bull puts, sometimes bear calls, but yeah, mostly debit. So, or credit.
Mostly credit
Yeah,
spreads.
credit
Mostly like you're selling put spreads.
Yeah, yeah, exactly.
Okay. And sometimes you're doing both sides.
Yeah, yeah.
Okay.
Sometimes.
And what kind of stocks you using or index? Same thing, tech stocks?
Yeah, primarily tech. Things that had like a lot of volume in it, and that I knew about pretty well. Like Chipotle, Intel, things like that. So
And-
pretty well known.
And you're still doing this kind of on your own. I mean, you don't have
Yeah.
your friends.
Yeah, exactly.
None of
Yeah.
your friends are sitting by your side.
No, not exactly. After seeing what had happened last year.
Okay.
So
Somehow you got your account up to like $8,000.
yes.
How'd you do that? Did
So-
your dad give you more money?
No, my dad did not give me more money. He promised me he was not going to put anything else in.
So how'd you get the account up to $8,000?
I kept working.
Okay.
Of course.
And you kept putting the money from working.
Yes, I kept putting
the account.
as much money as I could into into the account, but in $1,000 increments, so I could still keep track of how much I had made from trading. And so yeah, I basically deposited over time, and now I'm sitting at around 10,000. So
Nice.
plus profits and deposits.
So the cool thing about this story is that in the last year, you're up about 25% trading.
Yeah. just
And
about.
which is impressive because it's not easy to trade, to go get a $3,000 account, even with adding $1,000 every now and then
Right,
that
yeah.
you're making on your own
Yeah.
to to 10,000. That's impressive. You happy with that?
I am pretty happy with how I'm doing. So,
Did your dad ever tell you if you get to a certain number, then he'll put more money in?
well, actually, he did tell me that if I had, if I ever wanted to, at around maybe 12,000, or if I wanted to, he would put in the same amount that I had in, so I could have even more buying power and more things to be able to do in the account.
How often do you trade now?
Probably at least like 3-4 times a day now. So I've trade daily.
So you're kind of like a little, like you're more than a future star. You're kind of a future, trading junkie.
Yeah,
At this
yeah, you
point.
can put it like that. Yeah.
Yeah, you're never going to be able to stop.
Yeah, I don't think I could ever go back.
Because I started when I was in my early 20s, and I've never looked back. I was a little older than you when I first started, because I didn't even know about First of all, there was no online.
Yeah, it was always more niche,
Well, we didn't have an internet.
Yeah, exactly.
But it's, once I started, I couldn't stop. So you'll be doing this for the next, 50 years. So in some capacity.
Yeah.
What do you think you want to study when you go to college?
I definitely want to study medicine right now. I want to become hopefully an anesthesiologist.
Oh, nice.
So yeah.
We have a lot of anesthesiologists who are customers here.
Really?
Doctors have a lot of downtime, and they also love trading. So this year, as you get into 11th grade and stuff, I think there'll be a lot more. I think other kids are going to get interested.
Yeah, I've definitely been. Actually, it's a bit surprising. Those same kids that it said you have no chance in this.
Now they're going to say, "Hey, how do we get in?"
They've been asking me how to get into it. So it's it's been a fun journey. So
yeah. By the way, that's what always happens. We've had some, just to give you some really something to look forward to. One of the kids who I first interviewed as a future star when he was 12 is now running a prop firm in Chicago, and they've been building their own software for 4 years, and now they're running a high frequency prop firm, and it's an amazing operation that they've built, and very successful so far. So and that was, let's see, they got to be 24 now, so that they started 12 years ago.
Wow. Okay.
Same kind of story, except he was 12 when he started, and then started managing his dad's money. Another kid that we interviewed when he was super young, went on to become a full-time trader, working for a prop firm. So there's lots of stories, where this stuff wasn't just like a passing, it just wasn't some phase that you go through.
Yeah.
I mean, it's something where like either they got into the industry, like, you might, as an undergrad, you might study whatever you need to study to go into medicine. And I'm not exactly sure what's required now, but you might take like finance as a minor.
Yeah.
And or math. What we do is really just, some version of calculus.
Yeah.
It's like you can call it whatever you want, but it's all math related. So and the other thing I think that you're going to notice, and tell me if this is the case so far, like your ability to do two things: take risk and make fast decisions.
Yes.
Do you notice that compared to like your friends?
Yes, I definitely have.
I mean, definitely learn how to take risk.
Right. Yeah. Exactly.
I mean, probably when you first started, you're like, oh man, you're like nervous about the iron condor or whatever it is.
Yeah. Exactly.
Now you're thinking like, it's just.
Yeah, it's it's all mechanical. Right. Exactly. So.
And then how fast do you make decisions now?
I'd say I act on decisions I make pretty quick, but also I assess the risk that's involved. I know that there's going to be risk, but
well, that's the whole thing. You're able to. It's all part of the same process.
Right.
Like,
exactly.
Yeah. It's all the same back of the envelope calculation, but you just do it in your head.
Right. Yeah.
Most people can't do that. I mean, it's a very rare skill for a high school kid to be able to do that. Like most people overthink everything.
Yeah, exactly. So I've learned how to kind of cut most of that noise out and just be able to act on it.
Your stories, like, I don't want to say it's typical because it's cool, but it's also something that I wish there was 100 of you, but there's not.
Right, exactly.
But it's a really fun story, and I think you're on your way to something special. So
I really hope so too.
Congrats on your success.
Thank you.
Your 25% return. And just remember, it's just a start.
Yeah.
Thanks so much.
Thank you.